Hello students, good evening. This is Bharath. Welcome to Vishnu IAS Academy. Yesterday we had completed our HIT 1 series of economy. Today we will be doing with second part and the final part of economy. Right. With this we will be completing the 5-star topics with respect to economy. Earlier we had finished our 5-star topics with respect to polity. I hope everyone is getting good. We will start our session today. Now, first topic, direct tax to GDP ratio. First of all, you need to know the difference between direct tax and indirect tax. The basic difference is that in direct tax, incidence and impact of taxation will be on the same person. But in indirect tax, incidence will be at one place and impact of taxation will be at the other place. You have read all these things in your static part, just I am giving you the glance. Now, why it is in use? Because recently, as per Central Board of Direct Taxes data, direct tax to GDP ratio rose to 15-year high in financial year 2023. Means this year direct tax collections were far above the normal values. What is this? Direct tax to GDP ratio reached 15-year high at 6.11%. Right, 6.11%. And with respect to tax buoyancy, first of all you need to know that what is the meaning of tax buoyancy. What is this? Students, tell me. Tax buoyancy means changes in the tax income with respect to change in the GDP. Right, which means tax buoyancy indicates the measure of efficiency or responsiveness in tax collection response to the growth in GDP. Means if for every 1 rupee change of GDP, how much there is change in the tax collection. And in this year, tax buoyancy actually declined from 2.52 to 1.18. Earlier, for every 1 rupee increase in 1% increase in GDP, there used to be 2.52% increase in tax collection. But this year, for 1% increase in GDP, there is only increase of 1.18% of tax collection. This is called as tax buoyancy, right? And as I told you earlier, direct tax collection is 6.11% of GDP. And to know about the different taxation in current scenario, presently tax to GDP ratio is 11.1% in financial year 2023. Out of this 11.1%, direct tax is 6.1%, around 6%, as we had seen in the earlier slide. So it is clear that in India, direct tax is greater than indirect tax. Income from direct taxation is always greater than income from indirect taxation. This is post 1991 phenomena. Before 1991, indirect tax used to be in a higher number. Post 1991, direct tax is higher number. Okay, and how you can remember this? Just sort of cheat code for this. See, in indirect taxation is common for all. For example, a tax on soap is common for all. It will be affecting the poor people also. So, a friendly government wouldn't be trying to increase the indirect taxation. So, for sure, direct taxation will be affecting only the rich people or the taxpayers. So, remember in that way that direct tax is greater than indirect tax in India. Okay, and how much for this year? 6.1% of direct taxation and around 5% of indirect taxation. And coming to other data, in India only 5.3% of the total population are filing income tax returns. Okay. And with respect to history of taxation in India, the concept of income tax was first introduced in India in 1860 by James Wilson. He is the first finance minister of British Indian government. Okay. And there is one period in Indian history where income tax was completely removed. It is 1865 to 1886. Remember this, 1865 to 1886, income tax was temporarily repealed. Okay. If you have any doubts, you can ask in the chat box. I will be answering them. Next, non-performing assets. What are these non-performing assets? Students, Yes, Ravani? Yes. Means, for example, I had taken loan from a bank, say SBI. I had taken loan from SBI, but I am for continuously for 90 days, I am not paying either the principal or the interest. Means from for 90 days I am not even paying the both principal and interest, then my loan account will be turning into NPA, non-performing asset. Okay. NPA refers to a classification for loans or advances of a bank that are in default or arrears. What is the amount of days? It is 90 days. Not only interest, either it can be in 90 days, either we have to pay interest or principal amount. If we are not paying any of them, our account will be turning into 90 days. And there is a classification with respect to this NPAs. What is that? I will be telling a mnemonic regarding this. Which is the authority which will be issuing PAN cards in India? Yes, it is NSDL. National Securities Depository Limited, NSDL. This will be issuing PAN cards to our Indians. Okay. So why I am telling this? This is the mnemonic with respect to the classification in NPS. If an account is not paid for 90 days, both interest and principal, it will be considered as NPA. If an account stands as NPA for 12 months, it is called as substandard asset. If a substandard asset stands as substandard asset for 12 more months, it will be called as doubtful asset. And finally, if it is difficult for the bank people to get back that loan from the people, it is considered as loss asset. So to remember this, the mnemonic is NSDL. So what is this? NPA, substandard asset, doubtful asset and loss asset. Now what is a standard asset? Standard asset is the one in which there is regularity with respect to payment of either the interest or principal, and when there is irregularity with respect to the payment, this NPA scenario comes into place. Okay. And recent trend is that it is a good news that NPAs in India are getting reduced. As per RBI's annual trend and progress of banking in India report for the financial year 22-23 showed that the gross NPA ratio fell to 3.9%. Okay. NPA ratio reduced to 3.9%. It is a very good sign for India. Why? Because there will be no twin balance sheet problem and all, economy will be doing good, and there will be more resources for giving loans to the further people, right? Next, K-shaped recovery. What is this K-shaped recovery? You might have heard this word during the our post-pandemic or post-COVID period in Indian economy and Hindu newspapers and all. But what is this? Post-COVID, when we are again going to the normalcy, some sectors started developing in a normal way. In the earlier way, where there used to be growth, and some sectors there was no growth and there was decline in their growth. Okay. So to show the graph, post-COVID, some sectors rose in their growth and some sector had seen a decline. See this shape? This is like K shape. So in an economy, if some sectors are doing good and some sectors are bad, if we are extrapolating that in a graph, it will be seen like this, called as K shape. There is recovery in the economy, but all the sectors are not growing in an equal manner. And with respect to COVID period, if we consider industry, software sector, retail sector recovered in a better way, but there are contact sectors like hotel sector, because even after COVID there is a lot of fear among us. So in that scenario, we can't be going to hotels, we will feel of some sort of risk factor. So hospitality sector, restaurant sector, hotels, hotels, room bookings and all declined relatively. So these are called as contact sectors. These contact sectors faced many problems post-COVID. See, travel, entertainment, hospitality, food services, all these had seen decline. This is called as K-shaped. And we can also use this K-shaped curve for other scenario. See, post-COVID, rich people were able to come out of the problem and they started increasing their income. But poor people didn't come out completely until now. Their inequality is getting, means they are getting more poorer. Means here inequality is getting increased. This is, we can consider the same situation as K-shaped recovery. That is the thing, it will be mentioned here. A K-shaped recovery is when one sector of the economy rebounds from a recession and another sector of the economy continues to decline during a recession. Okay, this is called as K-shaped recovery. Earlier, a question based on this in the mains was also asked, related to this K-shaped recovery, V-shaped recovery and all. All these were mentioned in our economic survey last year. And with respect to this income inequality, what is the graph we will be using? For income inequality, to showcase the income inequality, what is the curve we will be using? It is Lorenz curve. And the coefficient which says the income inequality value is Gini coefficient. Okay, remember this. Next, direct listing of public Indian companies. What is this? Earlier, Indian companies are not allowed to be listed in foreign stock markets, right? There were many restrictions on this, but recently, due to this was allowed by companies listing of equity shares in permissible jurisdiction rules and amendment to foreign exchange management non-debt instrument rules 2019. Based on this, now Indian companies are allowed to display on foreign stock exchanges. In the same way, it are being allowed to display in our GIFT, International Financial Services Center. GIFT City is there now in Gujarat. Indian stock companies can also be displayed there also. And what is the expected benefits of this being showcased there? We will be able to get foreign investments. Indian companies access to cheaper foreign capital, boost foreign investment, etc. Right? Because if they are shown in only Indian stock market, what happens? Only Indian people can invest in them, in their equity. But since they are displayed in the foreign stock exchange also, foreign FPIs and these foreign institutional investors, individuals, they also can invest this. So new lines of support will be coming for Indian companies. Next, SBI Green Rupee Term Deposit Scheme. What is this? The name itself says the answer actually. Rupee term deposit. Term deposit means there is some time period, 3 years, 5 years, 10 years, like that. Rupee term deposit means the value is denominated in rupees. Green rupee. What does this mean? The money which were deposited in this green deposit scheme, that money will be used in green sectors like renewable energy, solar energy. For the development of green energy in India, we will be using that money. That's why this has been named as SBI Green Rupee Term Deposit Scheme. So question can be asked in this way, and also Green Rupee Term Deposit Scheme has been initiative of which bank? State Bank of India. It is an initiative of State Bank of India with the aim of raising money to finance environmental friendly projects. And remember, in this, not only Indians, NRIs can also participate, resident individuals, non-individuals and NRIs can also participate. And one more thing, here it is denominated only in rupees. It is not denominated in foreign currencies, and premature withdrawals are also allowed under this and using this deposit amount we can show this as collateral and we can take loans also. That is also available. That facility is also available in this scheme. Next, Aadhaar based payment system. Many of us might have seen this also earlier. Aadhaar based payment system. When we are going to some sort of PDS shops or in rural areas, we can collect money from this banking correspondence and all using this Aadhaar based payment system. What is this? There will be EPOS. In this EPOS, we will be entering our Aadhaar details and we will be giving our fingerprint. Based on that, money can be transferred. This is called as Aadhaar based payment system. In this, no OTP and all these are not there. Money which bank account which is linked with Aadhaar will be used for transaction here. Aadhaar enabled payment system, and it is being developed by, yesterday itself I told you, it has been developed by National Payments Corporation of India. And I told you this also yesterday, National Payments Corporation of India is jointly developed by RBI and Indian Banks Association. Remember this because the NPCI is highly in use in the last 1 year due to many of its inventions. Okay, and there is recognition for our Indian NPCI all over the world. So please learn all the initiatives which are related to NPCI. And in this Aadhaar enabled payment system, it is a bank-led model that allows online interoperable financial transactions at POS or micro ATMs through the business correspondent. Okay, he will be helping in Aadhaar authentication for us. Now, why it will be useful? Because we know that in rural areas there is very less financial inclusion. In those areas there are less financial infrastructure also. To take money, it is needed for this Aadhaar enabled payment system in rural areas and for poorer marginalized sections also. And it eliminates the need for OTPs, bank account details and other financial information. Only bank name, Aadhaar number and captured fingerprint during Aadhaar enrollment is sufficient to make a financial transaction in this Aadhaar based payment system. Okay, I hope you are getting this. Next, global hydrogen trading mechanism. What is this? Yeah, students, leaving aside this topic, for this UPSC Prelims 2024, green hydrogen is one of the important topic. Even last few years there were some questions with respect to green hydrogen. This also last year there was launch of National Green Hydrogen Mission. Please go through it. I will be covering this in our last class with respect to environment also, but please keep focus on this green hydrogen. And with respect to this global hydrogen trading mechanism, we all know that Indian Gas Exchange is situated in Gujarat. This Indian Gas Exchange and Gujarat State Petroleum Corporation signed an MOU to establish this global hydrogen trading mechanism in collaboration with Gift City in Gujarat. So what does this do? Since green hydrogen is a new variable in our economy, so finding the payment or the exact value of this green hydrogen is needed. Means market based value based on the demand and supply of green hydrogen. For this, it will be helping in the price discovery of green hydrogen. They will develop a global hydrogen price index, a benchmark for price discovery. Okay. And this is Indian Gas Exchange is India's only gas exchange, and this is India's first global hydrogen trading market. Okay. Next, urea gold. This is very important for this year's exam, urea gold. What is this urea gold? You all know that agriculture forms a major part in our UPSC prelims. Every year we will be seeing around 5 to 6 questions, and in 2020 and 2021 paper around 8 to 9 questions were related to agriculture topic. So please don't neglect this. All the questions from agriculture will be relatively easier compared to the other topics. So please focus on this in this last leg of your preparation. And what are the topics you have to cover under agriculture, I will be showing you in the last slide. Okay. And regarding this urea gold, what is this? If we are adding sulfur to urea, we call it as urea gold. Yeah. Come in. urea gold is sulfur coated urea. Recently, Cabinet Committee on Economic Affairs approved the launch of urea gold. Urea gold is a sulfur coated urea. But what is why there is need for coating of this urea, coating of the sulfur on urea? Firstly, in Indian soils there is lack of sulfur. Sulfur is needed for proper plant growth. And one more thing, for the normal urea, nitrogen use efficiency is relatively lesser. Okay, so once we will be adding this sulfur and making it urea gold, as per reports, nitrogen use efficiency will be increased, and also yield of the plant will be increasing. That's why we are discovered this urea gold. And who had discovered this urea gold in India? It has been developed by Rashtriya Chemicals and Fertilizer Limited. Rashtriya Chemicals and Fertilizer Limited. This organization has developed this urea gold in India. Okay, and in normal urea, nitrogen content is 46%. Then what is the nitrogen percent in urea gold? Tell me. No, nitrogen percent. In normal urea it is 46%, but in urea gold it is 36%, and of sulfur is around 17%. We are adding sulfur, right? That's why. Okay. And with adding of this sulfur, what happens? Since it is a non-organic slow release fertilizer. Based on this, nitrogen fixation happens in a slow way. With the help of this, plants will be staying greener for longer time. Okay. Sulfur coating ensures a more gradual release of nitrogen. It prolongs the urea action, thus helping plants to stay greener for a longer time. Okay. And as per ICAR study, use of sulfur coated urea leads to reduction in urea consumption by 25%. We all know that there is a lot of urea subsidy in India, around 1.25 lakh crores. It is a heavy burden on our financial resources. So government is planning to reduce the usage of this urea, because many problems in our agriculture sector due to fertilizer mismatches also. So need of these inventions. This is the need of that. And along with this, please go through the topics like neem coated urea and liquid nano urea. Those are also very important. Next, flue cured tobacco. What is this? No, tobacco. We will be harvesting the tobacco leaf, no? Making of this cigarettes and tobacco from these leaves is called as curing. That process is called curing. Okay. Curing is a process by which the harvested tobacco leaf is made ready for the market. Okay. And there are 3 different types of making this market oriented tobacco. These are air cured, fire cured and flue cured. But in India, mostly we will be using this flue cured tobacco only. It is most famous in Karnataka and Andhra Pradesh. Okay. And presently why this was in news? Because recently Government of India approves interest free loan to flue cured Virginia tobacco growers in Andhra Pradesh. Okay. You all know that in Andhra Pradesh tobacco cultivation will be in a higher scale. Government of India had approved giving easier loans for them. Okay. And this flue cured Virginia tobacco is predominantly cultivated in India, primarily in Andhra Pradesh and Karnataka. And is tobacco, flue cured Virginia tobacco is a rabi crop or kharif crop? Online students? It is a rabi crop or kharif crop? Yes, it is a kharif crop, since it is a rain fed crop. Okay. And India is world's second largest producer and exporter of tobacco. Okay. Yes. Next. Card on file tokenization. This is also very important. You might have known this topic earlier also. Tokenization. What is this? Earlier, when we used to buy from Amazon or from any online e-commerce platforms, we used to type our debit card details, CVV and all. But all those, since there is chance of security breach. Earlier, before ago 1 year ago, around many details of this our debit card details have been hacked. So there is chance of financial security breach of our details. So in this scenario, RBI had introduced this card on file tokenization concept. What is this? Our debit card details will be replaced by a token. It will be a unique number. There will be no importance of this token number outside the transaction. For that transaction, it will be unique. Okay. Now, why it was started around 2 years back. But now, why it is in use? Because earlier, the creation of this token process used to be done by merchants like Amazon, Flipkart and all. But there is chance of security breach at their end also, right? Yes. So, recently RBI changed this and allowed the card issuing banks. For example, I am having a Visa card issued by SBI. Now, tokens will be produced by SBI itself. Okay. This is the change recently made by RBI to control, to improve the security of our transactions. Okay. Tokenization refers to the replacement of actual credit and debit card details with an alternative code called as token. Okay. Thus, this token is used as a surrogate for the actual card details, making it more secure to store and transmit. Right. And the recent change which I told you, in order to make digital payments more secure, safe and sound, the Reserve Bank of India has now enabled card on file tokenization through card issuing banks. Okay. This is the major change which has been made. Next. Non-convertible redeemable preference shares. Leave about this all the big word. First of all, you need to know about preference shares. What are these preference shares? The name itself says preference. It means in case of paying the dividends or in case of liquidation of a company, the holders of this preference share will be preferred over the normal shareholders. That's why they have been named as preference shares. Okay. Preference shares, more commonly referred to as preference stock, are shares of a company stock with dividends that are paid out to shareholders before common dividends are issued. Okay. But now, why these are in use? Because SEBI recently proposed to permit companies to issue non-convertible debentures and non-convertible redeemable preference shares. Earlier, there is limit for them. Earlier, only 1 lakh face value preference shares were allowed to be given. Now, face value of 10,000 shares can also be given with this new step. Okay. Next, green deposit. Wherever green is there, it is related to environmental friendly things, sustainable, renewable energy sector and all. Similarly, here green deposit is also related to the same thing. In general terms, a green deposit same as a fixed deposit for those who want to invest in environmental friendly projects. You all know that the money which we will be depositing, whether in our savings account or in our fixed deposits, that money bank will be diverting to give loans. Right. Now, if I am investing in green deposit, means I am keeping my fixed deposit in green deposit account. That bank will be giving that money as loan for environmental friendly projects only. This is a new invention. Okay. To promote green things in India, because we had a target of net zero. What is the net zero target for India? By which year?
2070.
Yes, 2070 is the net zero target for India. Just like a regular fixed deposit scheme, the green deposit pays interest to its investors and has the fixed term. Same, it is completely similar to fixed deposit. There will be interest payments to us, there will be maturity period and all. Okay. And the green activities or projects financed under this framework can be classified under priority sector. Okay. Means the money which will be giving, banks will be giving the money from this green deposits to the specific projects, no? Those projects can be considered as priority sector projects. We all know that there is requirement of priority sector lending for the banks.
Yes.
Okay, what is the percentage?
40%.
Yeah, 40%, and for specific sectors it will be varying. Okay. So the loans under this green deposit can be considered as part of priority sector lending. Okay. And why this is in news presently? Because recently RBI said it is not mandatory for banks and NBFCs to raise green deposits. It is not mandatory. Remember this, because UPSC can ask in the way that it is mandatory. Okay. It is not mandatory to give deposits both for banks and also NBFCs. Next, general government debt. As per encasing FRBM review committee recommendations, what is the maximum allowed this general government debt in India? Debt to GDP ratio. What is the maximum allowed thing? It is 60%. 60%, 40 center, 20 state. Okay. This is as per the requirement of FRBM committee. But what is the present scenario? India's general government debt is nothing but combining both addition of central government debt and state government debt. India's general government debt was 80.9% last year. Okay, it is 80.9%. Nowhere nearer to the 60%. As I mentioned you earlier, FRBM rules 2018 endeavors to limit GCT at 60% of the GDP by 2024-25. Target is to reach 60% by 24-25. Next, investor risk reduction access platform. What is this? Investor risk reduction access. We all know that there will be number of risks while we will be investing in stock market, and these risks can be of price fluctuation, but there is also a chance of risk due to technical glitches, because there might be some sort of technical glitches, power glitches and all. Settlement can be taken place in a delay and all these are possibility of all these are there. To control this, new platform called investor risk reduction access platform have been created by SEBI at which place? Has launched at Bombay Stock Exchange. Okay. This IRA platform has been developed to reduce risks faced by investors in eventuality of a technical glitches. Okay. This is not for something of price change, for technical glitches only. And it is been jointly developed by Bombay Stock Exchange, National Stock Exchange, NCDEX, MCX and Metropolitan Stock Exchange of India. It has been launched at Bombay Stock Exchange, but it is developed by other stock exchanges combinedly. Okay. Next, rapid transport system, regional rapid transport system. What is this? Regional rapid transport system. You might have heard about metro. In Hyderabad and in other places also you are having metro train. Okay. And there are normal trains. But why there is need of this regional rapid transport system? What is the major difference for this? We all know that metro is for traveling between smaller areas, means only for nearer areas.
Within the city premises.
It will be going in a faster way, in a going to nearer places in a faster way. What conventional trains? Conventional trains will be going for longer distances but in slower way. This will be having the facilities of both. It will be going to relatively longer distances and in the faster way. That is the USP of this regional rapid transport system. And where it has been started for the first time? Recently, the first regional rapid transport system was launched in India with the name of this train is Namo Bharath Rapid X Train. Namo Bharath Rapid X Train, completing a 17-kilometer stretch from Sahidabad to Duhai Depot in Uttar Pradesh. Sahidabad to Duhai Depot in Uttar Pradesh. Remember this because this can be asked in one of the statement. May not be a standalone question, but in one of the statement it can be asked. It can be used in your elimination.
Yes.
Okay. And who is the anchoring institution for this? National Capital Region Transport Corporation is responsible for this implementing of RRTS in the National Capital Region. Okay. And what is the speed of this? It will be operating at 160 km per hour and it will be able to run at 180 km per hour also. Okay. Next, prompt corrective action framework. Prompt corrective action framework. 1 minute. Prompt corrective action framework. What is this? See, there is chance that there will be a default in the bank. Banks can face some sort of problems. In what ways bank can face problems?
Deposit, I mean,
Bank will be giving loans. That loans may not be coming back.
Yes, sir.
Deposits might get reduced. Bank's reputation might get problematic. In all these situations, banks can face problem. Once banks faces problems, many problems will be garnering in the economy also. So yesterday we had seen about DSIPs which will be creating too big to fail.
Yes, sir.
Because any problem in the banking sector, it will be going to the other sectors also. You might have known about global financial crisis. All that crisis had been started due to the failure of Lehman Brothers Bank in USA.
Yes, sir.
So to avoid this situation, to control that situation, as an proactive measure, we had started prompt corrective action framework, which means RBI will be considering some parameters. If banks are in below those parameters, it will be keeping some restrictions on the banks to make it profitable, to gain, to control the problem. No, this is not a reactive measure, it is a proactive measure. It won't be dealing with the situations once bank had turned into problem. It will be dealing into the situation in the stage of going into problem. Okay. So with this framework, banks do not get default.
Yes.
Okay. And in India, RBI introduced the PCA framework in 2002. Now PCA framework is applicable to all except regional rural banks, payment banks and small finance banks. Prompt corrective action is applicable to all except RRBs, payment banks and small finance banks. Okay. And as I told you earlier, there will be some specific parameters. Based on those parameters, RBI will be deciding which banks must be kept under this prompt corrective action. Okay. And what are those parameters? There are 3 risk thresholds which are based on certain levels of capital, asset quality and profitability. These are the 3 parameters which RBI will be considering. And how bank will be deciding this any problem in capital, asset quality and profitability? There are 3 different parameters for this. For capital, whether to check bank is having enough capital or not, RBI will be based on CRAR value, common equity tier 1 value. And with respect to asset quality, it will be based its application on NPA ratio. And with respect to profitability or leverage, it will be based its applicability based on tier 1 leverage ratio. So these 3 are the indicators. There will be one value. If value of these 3 will be going below these 3 with respect to one bank, then that bank will be placed under prompt corrective action framework. Okay. And why this is a news recently? Because RBI has decided to extend PCA supervisory norms to government-owned NBFCs from October 2024. Okay. Earlier, government-owned NBFCs are not under PCA framework. Normal NBFCs are already under PCA framework. By this notification, government-owned NBFCs will also be coming under PCA framework. And now, you need to know what happens if a bank is being placed under PCA framework. These are the things which will be happening. If PCA is triggered for a bank, banks are not allowed to renew or access costly deposits or take steps to increase their fee-based income. Means they cannot accept new deposits, costly deposits. Next, banks should launch a special drive to reduce the stock of NPAs. They need to take extra effort to reduce NPAs. Banks will also not be allowed to enter into new lines of business. No new business will be allowed by the banks. Next, there will also be imposition of restrictions on the banks on borrowings from the interbank market. Because if this bank is under problem and again it is taking loans from other bank, that bank will also chance that it also will be facing problems in the future.
Yes.
That's why these all the restrictions will be coming if a bank is placed under PCA framework. You might have seen earlier this Punjab Cooperative Bank, Maharashtra PMC Bank, all these have been kept under this prompt corrective action framework.
Yes.
Okay. And one more thing. Earlier, the third criteria is not profitability. Earlier the criteria was return on assets. Now it has been changed to profitability. I am telling this is because UPSC can in this place it can keep return on assets. Okay. Next. And there is a similar application of prompt corrective action for cooperative banks also, but there the name is not prompt corrective action, there the name is supervisory action framework. Okay, what is the name? Supervisory action framework for UCBs. Next, royalty rates on 3 critical and strategic minerals. What is this royalty? What does royalty mean?
Some interest payment.
Means you all know that for all the minerals or resources, government is the owner. Now government will be allowing the private players like us to go and use the minerals. But what is the benefit for getting for the government?
Fees.
In that scenario, those private players who got tender to use that mineral must pay royalty to Government of India. These are called as royalty rates, and these royalty rates will be fixed by Union Cabinet. Recently, since there is a we had seen a new there are use of critical and strategic minerals in India like niobium, lithium and all. So to ease the process of auction and tendering, there is a requirement of finalizing these royalty rates. That's why we had finalized these royalty rates in India. The Union Cabinet has approved the amendment of second schedule of Mines and Minerals Development and Regulation Act 1957 for specifying rate of royalty with respect to 3 minerals: lithium, niobium and rare earth minerals, rare earth elements. If this is not finalized, because auction process cannot be proceeded. Okay. This will enable the central government to auction blocks of lithium, niobium and rare earth elements for the first time in the country. Okay. Earlier this has not taken place. You might have seen coal auction, spectrum auction and all. This is the first time happening in India. Okay.
First time for the private sector.
Yeah. And not only this, around 24 other minerals also recently changed in the last 1 month. Okay. Next. Exporter status certificates. Exporter status certificates. What is this? Exporter status means this is a sort of recognition. See, for example, if I got a doctorate, I will be getting one paper regarding that I got a doctorate. Similarly, what is that use of that? I can use my name in other sectors or in my job anywhere. Similarly, a specific exporter will be giving exporter status certificate. If he has been awarded this exporter status certificate, he will be getting some benefits in the other countries while he will be exporting his goods, like benefits like easier customs process. He will be on preference for clearing any approvals and all, because he has already been recognized by Indian government that he is a credible exporter. That's why this status holder certification program enhances the credibility of Indian exporters in international markets. And what are the privileges they will be getting? Simplified procedures, priority custom clearances and exemptions from certain requirements. Okay. And this Ministry of Commerce and Industry has launched a digital system. Earlier it used to be happen in a very bigger process. Now a digital platform has been created for issuing status holder certificate based on Foreign Trade Policy 2023. In Foreign Trade Policy 2023, it has been mentioned that it is the need of hour for the government to increase the exports, and for that there is need for promotion from Indian government. In this scenario, we have started this digital system for issuing status holder certificates. Okay. And please read about this Foreign Trade Policy also. It will be more important for our mains examination, but there is chance of asking the targets with respect to Foreign Trade Policy in prelims also. And earlier, what is the process for issuing these status certificates? Exporters have to apply to the Directorate General for Foreign Trades for a status certificate earlier, but now automatically it will be getting through this digital platform. Next, minimum support price, MSP. It is very important. You all know every year a question is guaranteed with respect to this MSP. Please go deep dive into these sort of topics. If UPSC has asked some sort of easier question in a topic, in next year or the further year, it can go deep dive into that topic. Please go 360 degrees in those sort of topics. MSP, FRP is one such topic. Okay. And with respect to MSP, what is this? Minimum support price. Means for the farmer's produce, what is the amount he will be getting, minimum amount he will be getting if he will be selling. In the market, these private people cannot sell, if the market price of that good is lesser than this MSP value, government must procure from them at this MSP value. And 100% procurement of total production is guaranteed only for rice and wheat. Okay. For all the other products, 100% procurement is not guaranteed. Okay. And there is no legal sanctity or legal recognition for this MSP system in India. And is MSP available for all the crops? Not all the crops. MSP is available for 14 Kharif crops, 6 Rabi crops and 2 other commercial crops. Okay. Total 22 crops. And based on this MSP value of toria and dehusked coconut are based on the values of MSP of rapeseed and copra. Okay. And one more thing, who will be deciding the values of MSP? Who will be recommending it? Recommendation of MSP values will be done by CSEP, Commission for Agricultural Costs and Prices. It is only a recommendatory body. But who will be finalizing the MSP values in India? Cabinet Committee on Economic Affairs. Specifically, CCEA will be finalizing the values. The decision was taken by the Cabinet Committee on Economic Affairs. Why it is in news? Because recently CCEA has increased the MSP value for all the Rabi crops. Okay. Next. CSEP will be recommending the MSP value based on number of parameters, like what is the cost of production by the farmers, what is the cost of that product in the foreign market, in the domestic market, what is the opportunity cost of growing that crop and all. Okay. Yes. And in India, MSP is 1.5%, 150% of A2 plus FL value. CSEP will be giving the A2 value, A2 plus FL value and C2 value. What are these? A2 value are the total cost of production taken by the farmer. All the cost of production borne in by the farmer for the production of his crop. This A2 plus FL includes the family labor value also. Okay. Here government is giving 150% of the cost of A2 plus FL. Means for example, 100 rupees a farmer had spent based on this A2 plus FL. Government will be giving 150 rupees on the purchase. 50 rupees is the profit. But now what Swaminathan committee is saying that government should give MSP of 150% not based on A2 plus FL but based on C2 also. What is the C2? In addition to the A2 plus FL, one more thing will be added. It will be leading to C2. What is that thing? Comprehensive cost that factors in rentals and interest foregone also. Okay. If he had not invested that money in growing the crop, he might have given that money for rent or interest to other people. So we should calculate the opportunity cost for that also. That is this C2 value. Okay. Next. Yeah, and what is the MSP for sugarcane is also applicable in India. For sugarcane, it is named as fair and remunerative price, FRP. Okay. Off budget borrowings. What is this? The name itself says off budget borrowing means these are borrowings. What is budget? Budget is a statement of receipts and expenditures. It will be calculating all the money which we will be spending and which we will be getting. Borrowings are the money which we are getting. But in this these off budget borrowings will not be accounted in our budget. That's why these are called as off budget borrowings. Okay. Off budget borrowings refer to the borrowings that are not reflected in the budget, even though budgetary resources will have to be used for this repayment. Why this has been created? Because we all know that there are FRBM limits in India. Government cannot borrow more than a specific limit.
Yes.
In this scenario, what government is doing to surpass this route? It had created a new invention called off-budget borrowings. And here, government won't be taking the loan directly. Corporations under government of India or the government of states will be taking. For example, past government in Andhra Pradesh, Jagan Mohan Reddy's government had taken number of loans under this off-budget borrowings. This had become a major news in the national media also. He had taken loans based on AP Beverages Corporation, AP Textile Corporation and all. All these are not accounted in this budget values.
Yes.
Okay. And with respect to central government, there is an example called for this Food Corporation of India will be taking loans now for this subsidy and all, for food subsidy. This is not accounted under budget. Okay. Off-budget borrowings are taken not by the government directly but by another public institution on its direction. Okay. And why this off-budget borrowing is used? To bypass the fiscal targets under FRBM Act, avoid borrowing limits under Article 293 of 3 and to avoid delay in central grants. Okay. Next. 25% public shareholding rule. What is this? There is a limit of 25% for every stock listed company. If a company is being listed in a stock market, 25% of its share must be publicly given. Means, what is this public here? That shares should be given not to the promoters. Say for example, take Reliance. Who is the owner of Reliance? Ambani family. Here, more than around Ambani family can keep shares up to 75% with them. This Ambani can keep whether in his wife's name or children's name or in his promoter's name. But minimum of 20% should be given to the public like us. Okay. In 100 rupees, 25 rupees of equity shares should be owned by common people like us who are not the promoters of the company. This is called as public shareholding rule, and this is sanctioned under Rule 19A of the Securities, Contracts and Regulation Rules 1957. Okay?
Yes.
Why this is needed? Because this is needed for price discovery. Because since they are the shareholders, they can artificially inflate the value. They can artificially deflate the value. This is the problem now with respect to Adani, short selling and all. So, to control this, to avoid this sort of situation, this rule has been kept. Minimum 25% shareholding value, public shareholding. Next. Pink diamond. What is this pink diamond? This is also one sort of diamond. Okay. But these are fancy pink diamonds, some of the rarest and the most coveted gemstones in India. And 90% of these pink diamonds available in one mine in Australia. It is called as Kimberley mine in Australia. Okay. What is the specialty? They will be having uniquely bent crystalline structures. Okay. We all know that diamonds are very costly. These pink diamonds are more costlier and most useful since they are crystalline structures, unique crystalline structure.
Yes.
And this word is in use, Kimberley process. If in the exam it has been asked that Kimberley process is in use, what is the reason? This Kimberley process is related to diamond manufacturing. Okay? Is a word related to diamond manufacturing. Next. Incremental cash reserve ratio. What is cash reserve ratio?
The amount of diamond deposit liabilities, diamond demand liabilities with the RBI.
Cash reserve ratio is the percentage of net demand and time liabilities of a bank that it must keep in cash with RBI. Okay.
Yes.
What is this net demand and liabilities? Net demand and time liabilities? All the liabilities of the bank. Means all the deposits and all. Net demand and time liabilities. Net value. And CRR will be decided by the RBI based on the market situations. In the percentage of CRR is around 4% now. Okay. Means in 100 rupees of this net demand and time liabilities, 4 rupees must be deposited with RBI, not with the bank. It must be deposited with RBI in a separate CRR account. There will be separate CRR account for every bank. It will be placed in RBI. No interest will be given for the deposit from the RBI.
Yes.
Okay. And now this is incremental cash reserve ratio. What is this? If RBI feels that there is a further requirement of increasing the CRR, means there is a temporary requirement. In that scenario, rather than increasing the CRR, it had created a new thing called incremental cash reserve ratio. In the extra amount which will be having, it must be presently RBI had kept 10% ICRR. Means in the extra NDTL banks are having, it must place 10% with the RBI. Okay, this is incremental cash reserve ratio.
Yes.
Recently RBI asked banks to maintain an ICRR of 10% on the increase in their net demand and time liabilities. CRR is for all NDTL. ICRR is for percentage of increase in the NDTL. Okay. Next, this is similar to CRR, wherein banks need to set aside certain portion with the RBI only. Remember, CRR will be with the RBI, SLR with the bank itself. To remember this, see, CRR. Since there are two R's here, this money, just as a mnemonic, this money should be kept with RBI. Okay. In SLR, only one R is there. So, this money will be kept with bank only. And in CRR, only cash is allowed. In SLR, bonds, G-Secs, gold, anything is allowed. Okay. Next, Goldilocks scenario. What is this Goldilocks scenario? You have heard of the word Goldilocks zone in science and technology. What is this Goldilocks zone? It is a habitable zone.
Yes.
Means it is a place where living for human is possible. Similarly, this Goldilocks scenario in economic perspective is a scenario where economy is doing good. It is not in a higher way or it is not in a lower way. It is in the middle path, stable. Unemployment is low, inflation is controlled, economy is doing good. Okay, this is called as, there is no high level of growth, there is no recession and all, but it is going in a stable and stable way. It is called as Goldilocks scenario. This can't be happening in a longer time. This is only for matter of fact of very less days. Okay. Describes an ideal state for an economy whereby the economy is not expanding or not contracting by too much. Okay. Steady economic growth preventing a recession, but not so much that inflation rises too much. Okay. The same thing ahead. And what are the features of this Goldilocks scenario? Low rate of unemployment, steady GDP growth, and relatively low retail inflation and low interest rate. Okay. Next, FRP. As I told you earlier, what is this FRP? Fair and remunerative price.
For sugarcane.
This is for sugarcane. MSP is for the other 24 crops we have discussed earlier. FRP. Who will be deciding this FRP value? Fair and remunerative price. This also will be recommended by CSEP only. And this also will be finalized by Cabinet Committee on Economic Affairs only. But for sugarcane, it is named as FRP. Okay. And there is another word called state advised price. This is also for sugarcane. What is this? Here, fair and remunerative price is being decided by central government, but state advised price is being decided by the state governments. And what is the need for them? Because there are some states like Maharashtra, Uttar Pradesh, elections will be fought based on the values, wellness of sugarcane farmers. So in this scenario, if they will be increasing the profit of the sugarcane farmers, they will be interested to vote for them.
Yes.
So this they will be keeping this SAP value, state advised price value, higher than this FRP value. What happens when these sugarcane farmers will be giving their sugarcane to millers? They will be giving extra amount rather than the FRP value. That extra amount is state advised price. Okay, this is not at all central government oriented. This is based on the state government instincts. Okay, that specific state government instincts. Okay. FRP is the cane price announced by central government on the basis of recommendations of CSEP only. Okay. This minimum price paid by mills to the farmers. And you all know, yesterday we had seen the pricing of drugs. in our polity class. It is based on drug control order. Okay. Similarly, for the pricing of sugarcane, there is sugarcane control order issued under Essential Commodities Act 1955. Okay. And I told you about this state advice price also. And why government should be going for this state advice price? As I told you, because of election pressure or for the pressure from the farmers and all. Okay. Next. Credit rating agencies in India. Also, rather than pressure, with respect to FRP, SAP I am telling, there is one technical reason also for that. The sugarcane grown in Maharashtra and Uttar Pradesh is variable quality. In one state, it will be having higher productivity and also higher sugar content. In that scenario, it is right that giving some extra amount. So, in that scenario, state governments will be giving some extra amount.
Yes.
Okay. And credit rating agencies in India. Okay. Remember one thing, I had selected these 5-star topics based on previous year trends. So, these are the bare minimum you have to do before going for the exam. Okay. Credit rating agencies India. This has been asked in the last year also. What are these credit rating agencies?
They give rating to the banks.
Not banks.
To the customers.
Yeah. There are around 7 credit rating agencies in India. CRISIL, ICRA, CARE, India Ratings and Research, SMERA, Infomerics and Brickworks. Okay. All these credit rating agencies in India must be registered with SEBI. Not only SEBI, there will be some oversight of RBI also, but mostly they are regulated by SEBI. Okay. Here SEBI is the main anchoring institution. Okay. And all the credit rating agencies need to be registered with SEBI in order to operate in India. And how many agencies are registered in India? 7. Okay. And in credit rating agencies in India follows issuer pays model. What is this issuer pays model? It is an irony actually, because if I am owning a company, say in my name Bharath, there is a company, Bharath Estates, and I want my company to be rated. In these 7 agencies, I can select which company can rate me. Which agency can rate me, I can select among them. So what happens? I will be paying them money to rate me. It is an irony, no?
Paid rating.
Because it will be sort of paid rating. This is called as rating shopping. Rating shopping. It is a practice of an issuer choosing the rating agency. In this case, if a Bharath Estates is there, I can select one among them which will be giving favorable rating to me. This is called as rating shopping. Okay? And India as a country will also be rated in the global market. And India will be rated by 3 companies globally, investment grade by 3 major credit rating agencies. They are Standard & Poor's, Moody's and Fitch. Okay. Standard & Poor's, Moody's and Fitch. And in news you might have seen the word called BA2, BA3 and all. These are investment grade quality. Means now Moody's has given rating of India as BAA3. This is investment grade. There is A grade, BAA3 and all. Okay. Now Moody's had given the rating for us as BAA3. Okay. Next.
That is for the companies or individuals as well?
Companies mostly. Companies mostly. The CIBIL will be giving for individuals also. Right. Public tech platform for frictionless credit. RBI has launched this pilot program for public tech platform for frictionless credit. It is just an app, open application. What it will be? What is the utility of this? There will be easier movement of credit, because all the credit who will be taking the loans and who will be giving the loans, all of them will be interlinked in this platform.
Yes.
There will be easier flow of information. Based on this, credit can be given in a frictionless way. That is the major motto of this.
Yes.
Okay. And it has been developed by Reserve Bank Innovation Hub. It is a wholly owned subsidiary of RBI. Okay. Next, windfall tax. What is this windfall tax? There is for example, I am the owner of Indian Oil Corporation. Okay. Modi ji won't be allowing this, but consider if I am the owner of Indian Oil Corporation. Okay. In this scenario, if the global market the cost of crude oil got reduced. I am selling in the same rate, in the earlier rate only. What happens? My profit will be increasing in a very high way. So in this scenario, if a company is getting lot of profits in a very smaller amount of time, government can put an extra tax on them on that additional income. This is called as windfall tax. And in India, it is in use because recently government had imposed windfall tax on oil companies due to this crude oil market.
Yes.
Okay. It is higher tax levied by the government on specific industries when they experience unexpected and above average profits. Okay. Windfall tax is imposed on an industry's profits when it experiences sharp increase in the revenue. Recently, India reimposed a windfall tax on domestic petroleum crude. Okay. Around 450 rupees has been increased. Next. E-way bill. E-way bill. What is this e-way bill?
Electronic bill for movement of goods.
This has been introduced under GST architecture. Okay. Goods and Service Act. E-way bills will be also giving under GSTN. Okay. What is this e-way bill? If I am a buyer of the goods and there is one seller is sending me some goods from one place to my place. If you have to send those goods in the transportation way, there is requirement of e-way bill. Okay. E-way bill is mandatory. Earlier there used to be check posts and all. It is similar to that e-way bills. Short form of electronic way bill is a permit needed for interstate and intrastate transportation of goods. It is a sort of permit to transport goods. Okay. And goods worth of more than 50,000 must mandatorily have e-way bill while transportation. And below 10 kilometers there is no requirement of e-way bill. If transportation is more than 10 kilometers, e-way bill is mandatory. And e-way bill is not needed in some specific sectors like perishable items, meat, milk and milk products and fruits and vegetables, gold and silver jewelry, cooking gas cylinders, raw silk, wool and handlooms. While transporting these items, e-way bills is not required. Okay. And the e-way bills validity varies depending on the distance that goods have to travel. Okay. For longer distances, e-way bill value will be more. Okay. And when an e-way bill is generated, a unique e-way bill number is allocated and is available to the supplier, recipient and the transporter. And on which platform e-way bill will be generated? Electronically generated through the goods and services tax network. GST returns will also be filed in this network only. Okay.
Sir, it is 100 kilometers or 10 kilometers? E-way bill.
E-way bill is 10 kilometers, more than 10 kilometers. Next. Twin balance sheet problem. What is this twin balance sheet problem?
Banks plus.
Yeah. See, the major players in our economy are banks, individuals and corporates. Now, most of the loans banks will be giving to corporates larger amounts.
Yes.
If there is default of loans with respect to banks, with respect to corporates, banks will also be facing problems. See, in a scenario, economy is not doing good. Say steel sector is in problem. All the companies like Bhushan Steel, JSW Steel, Tata Steel, all these are normally all the companies will be taking loans. There will be a situation that they can't repay the loans to the banks. In that scenario, what happens? Their balance sheet will be problem. Company's balance sheet will be problem because they can't pay the liability. And when these companies cannot pay the liabilities to the banks, here the asset quality of banks will also be problematic in their balance sheets.
Yes.
So in this scenario, balance sheets of both corporates and banks will be problematic. This is called as twin balance sheet problem. Okay, twin balance sheet problem. Yeah, that is the thing. Mahila Samman Savings Certificate. Mahila Samman Savings Certificate. This is a small savings instrument recently launched by Government of India. This is important because these sort of questions were being asked if any new initiative have been launched. Okay. Normally, if we are depositing in a savings account or fixed deposit account, maximum interest rate we will be getting is around 6% and all. Okay. To make this utility of this scheme, government had increased the interest rate for this scheme at 7.5% per annum. Okay. And this is a small savings scheme. It is available for subscription in post offices and eligible scheduled banks. We can get these Mahila Samman savings certificate from these bodies, and account can be opened under this scheme on or before March 31st, 2025 for a tenure of 2 years. Who can open this account? By woman for herself or a guardian if that woman is a minor. Okay? And the investment limit is minimum of 1000 rupees and maximum of 2 lakhs. Okay? Interest rate is 7.5%. Recently, government permitted all public sector banks and private sector banks to implement and operationalize this Mahila Samman Savings Certificate. Okay, this is very important. Next, centralized information management system. This is nothing but a sort of warehouse, data warehouse. Means all the data related to growth of India or inflation values, market values, changes in the values and all the data will be collated at one place of RBI called as centralized information management system. This data, as you all know, data is the new oil in this 21st century. Using this data and using the big data sort of things, RBI can arrive at better policies. This will be helping in the better policy framework. Okay, this has been introduced by RBI. It would be working as a next generation data warehouse. This is a platform for data mining, text mining and statistical data analysis. Earlier, RBI established its first enterprise-wide data warehouse, Central Database Management System in 2002, and recently it has changed to Centralized Information Management System. Okay, because now there are new inventions like big data, artificial intelligence, machine learning and all. Yes. Okay. Next, real estate investment trusts. What are these? This is also, for example, real estate investment trust is an organization. It will be pooling money from normal people and it will be investing that money in real estate projects, commercial real estate projects, not in residential projects, commercial real estate projects like office buildings, shopping malls, apartments, hotels, resorts, self-storage facilities, warehouses, mortgages or loans. Means we will be investing that money, no? They will be getting profits. That profits will be shared between the people who had invested in this real estate investment trust. Yes. Okay? It is sort of pooling of resources. There will be asset management facility, company in share market, no? They will be investing in different shares. Similarly, here real estate investment trust will be investing in different real estate projects. Okay? Yes. There is one more thing called infrastructure investment trust. There that money will be used for infrastructure projects, like roads, railways and all. Okay, that owns and typically operates income producing real estate or related assets. This is just for increasing the investment in the economy. Okay, unlike other real estate companies, here real estate investment trust does not develop real estate properties. What happens? See, for example, here My Home Constructions is there in Hyderabad. What it will be doing? It will be developing real estate projects from scratch. But here real estate investment trust do not take the headache of all this. It will be only investing and taking the profit. That's all. Okay. Next, Swami Investment Trust as an investment fund. What is this Swami Investment Fund? See, for example, real estate sector and specifically housing sector had faced a lot of problems in the last 10 years, earlier also, because it is a very unpredictable sector. Many real estate projects, housing projects, gated communities, apartments and all, they had started, but construction companies couldn't complete it due to their financial crunch. So in this scenario, Government of India had created a fund called Swami Investment Fund. And if that buyer, that construction company is a credible company and it is genuinely facing some sort of problem, government will be taking the responsibility of completing that project. Okay, because why it is needed? All the common people like us will be giving money. We will be buying flats there, and if that construction company is stalling that projects in the middle, we will be facing the problem. So to avoid those sort of things, Government of India started this Swami Investment Fund. Okay, operated by Ministry of Finance. Full form is Special Window for Affordable and Mid-Income Housing Fund. This is a government-backed fund that was set up under Category 2 Alternate Investment Fund, registered under SEBI. This is not needed for exam. This Swami Investment Fund was formed to complete the construction of stalled RERA projects. Okay. And this is sponsored by Ministry of Finance and managed by SBI Cap Ventures, a unit of SBI. Okay. Next, Agriculture Investment Infrastructure Fund. This is also fund for the development of infrastructural facilities, post-harvest management infrastructure facilities is there, no? For development of those sort of facilities, fund will be given. Either loan, either in the form of loan guarantees or interest subvention, this agriculture investment fund will be supporting. Okay. What sort of post-harvest management requirement is there in India? Cold storages, supply chain infrastructure and all.
Yes.
Okay. It will be giving, agriculture infrastructure fund will be giving medium to long-term debt financing facility. Okay. For post-harvest management infrastructure. This is a central sector scheme launched in 2020. Duration is up to 13 years from financial year 2020 to 2032. Okay. And who are the intended beneficiaries here? Primary agriculture credit societies, marketing cooperative societies, FPOs, self-help groups, farmers, multi-purpose cooperative societies, agri entrepreneurs and startups. All these can use this facility and take loans from the banks, and they can construct these post-harvest management facilities. This agri infrastructure fund will be acting as a bank guarantee.
Yes.
And if you are repaying the loan properly, it will be giving interest subvention for the interest which we had paid, some amount of it will be given back to us as a good gesture.
Yes.
Okay. And here NABARD will be managing this initiative under Ministry of Agriculture and Farmers Welfare. Okay. OECD G20 Inclusive Framework Tax Deal. What is this? We all know that these big companies like Amazon, Flipkart or Google and all are using loopholes in the tax laws to pay very less tax or not at all paying the tax. This is called as base erosion and profit sharing. They are keeping their head office in small jurisdictions, in small countries like Bahamas, Mauritius and all, where taxation is very less. They will be keeping the head office there. So they need not pay any taxes on their profits. It is creating very problems because see, Google is having lot of market in India, but it is not at all paying tax in India. This is called as base erosion and base erosion. So to solve this problem, all the countries in the OECD G20 framework signed an agreement called Inclusive Framework for Tax Deal. In this, 2 pillars have been created. If a question has been asked, 2-pillar framework, 2-pillar plan is related to which thing? It is related to base erosion and profit sharing. Okay. India and majority of the members of OECD have joined the new 2-pillar plan to reform international taxation laws. This is sanctioned by OECD and G20. And what are the 2 pillars here? First pillar is fairer distribution of profits and taxing rates among countries with respect to largest multinational enterprises. What is this? 25% of the profit, 25% of the profits will be given to market jurisdictions where these multinational companies will be having more customers. See, for example, Google is having lot of market in India, but it is not paying any tax to India. In that scenario, around 25% of the tax it will be profits it will be gaining 25% of that profit should be given to India. Okay, based on the customer base it will be decided. This is first pillar. And in second pillar, if these companies are not paying tax at all, they must pay 15% of global minimum corporate tax. Okay, and how this 15% will be shared between this different countries will be decided by this framework. Okay, that is pillar 1, and this 15% of global minimum corporate taxation is pillar 2. Okay, recently 138 countries including India has agreed for the implementation of this global tax deal, including India. Remember this is a flagship initiative, landmark initiative also. Okay. Next, about RuPay card we have discussed earlier yesterday, everything regarding RuPay card. It is developed by NPCA and all. And one more thing I have to add here is RBI had permitted the banks to issue RuPay prepaid forex cards with RuPay authorization. Why? Because RBI and Indian government wants to globalize our RuPay card, like same as Visa and MasterCard. That's why it allowed RuPay to issue, banks to issue RuPay prepaid forex cards. Okay. Next, CIBIL. You all might have heard this CIBIL score and all, CIBIL values. What is the full form of this CIBIL? Credit Information Bureau India Limited. What is this CIBIL? Based on our credit parameters in the past, means how many loans we had taken, how we had repaid, whether there are any default, whether there are any check bounces. Based on this, our CIBIL scores will be calculated. CIBIL score is the value between 300 to 900. If we are nearby 900, it means we are good credit worthy, and it is lesser, we are not credit worthy. Banks will be deciding based on the CIBIL score whether to give loans for us or not, or to add extra premium as a risk premium if we are less credit worthy. Okay, all this will be based on CIBIL score. Okay, and this is the leading credit bureau and credit information company licensed by RBI, and its primary function is to collect and maintain financial data regarding our loan characteristics and all. Okay, and CIBIL India is a part of TransUnion, an American multinational group. That's why credit scores in India are known as CIBIL TransUnion score. If you check your CIBIL score in Policy Bazaar, it will be showing this as CIBIL TransUnion score. This color coding will be coming now based on this. And you need to know about the CIBIL score. I already told you, this is a 3-digit numeric value, 300 to 900. Nearby 900, it is good. Okay. Next, Antardrishti. What is this? This is a financial inclusion dashboard. This is an internal application of RBI. Means how much percentage of the population was under financial inclusion, whether all the areas in the country were under financial inclusion, what are the gaps in financial inclusion in India, what are the more things which we have to do. All these things will be handled by RBI based on this Antardrishti. Okay, means all the database regarding the financial inclusion will be available in this Antardrishti platform. This is an internal dashboard for RBI. Okay. Next, strategic reserves of crude oil. Okay, we all know that crude oil is a major ingredient for the growth of any economy, and India, the penetration of electric vehicles is relatively very less. We are dependent on crude oil for many things, for gas, for petroleum, diesel and all. So in this scenario, there is requirement of crude oil, and there will be lot of price fluctuation with respect to crude oil, and there might be a situation like this Ukraine crisis, Israel crisis, or any global problems, COVID problems. Like in that scenario, there is requirement for some sort of reserves of crude oil to surpass that situation. So in this scenario, as other countries will be developing, India also developed some sort of strategic petroleum reserves. Okay, means those are sort of storage facilities for crude oil. If there is any shortage or any problem, we will be taking crude oil from them and we will be giving to the people. Those are called as strategic petroleum reserves. Okay, are stockpiles of crude oil maintained by countries ensuring a stable supply of crude oil even during times of geopolitical uncertainty. Okay, and in India, construction of the strategic petroleum reserves is authorized by Indian Strategic Petroleum Reserve Limited. It is a special purpose vehicle under Ministry of Petroleum and Natural Gas. Okay, presently India's strategic petroleum reserves can have a cumulative capacity of 5.33 million metric tons. It is just sufficient for 9.5 days. Okay, for 9.5 days we have storage. Okay, as per International Energy Agency, there is minimum requirement of 90 days. 90 days. Okay, and India is not a member of International Energy Agency. India is only associate member. Okay, now where are the strategic petroleum reserves in India? This can be asked as a question because this is highly in use. See, presently India is having 1.3 million metric ton in Visakhapatnam, 1.5 million metric ton in Mangalore, 2.5 in Padur, both these places in Karnataka. Okay, presently 3 facilities are available in Visakhapatnam, Mangalore and Padur. Now government had started initiating the construction of new strategic petroleum reserves in 2 more places of 4 mega metric tons in Chandikol and 2.5 metric tons in Padur in Karnataka. Okay, he can give these places, and what is the common thing among them, he can ask like that. It is strategic petroleum reserves. Okay, and all these are excavated rock caverns. Means underground we have to excavate the rocks, and there we have to store this crude oil. Now there is a new invention called salt cavern based reserves. Means underground there are salt deposits. We can send a solution and dissolve that salt. There empty place will be created. We can store store the crude oil at that place.
Yes.
These are called as salt cavern based reserves. Government of India is planning to use this also. This is this can happen in a faster way. We can operate that from surface itself. No need to go deep and dig there, and it happens in a faster way and a easier way and less costlier way.
Yes.
Okay. Next, I had seen this. Developing country status in WTO. What is this developing country status? See, in WTO, all the countries will be divided as developed country, developing country, and least developed country. But as per the rules of WTO, whether a country is developed country or developing country will be decided by the own country itself. As per WTO, presently India and China both are developing country only. See, China is also a developing country as per WTO. Why a country will be interested to showcase themselves as developing country in WTO? Because if a country is a developing country as per WTO, it will be getting many benefits. We all know that there are many agreements in WTO. There will be some time limit with respect to the implementation of those agreements. If a country is developing country, it will be getting more time to implement those agreements. So India and China or other countries wanted to make themselves or mark themselves as developing countries. And with regard to least developed countries, United Nations itself will be giving the status of least developed country. Okay. No WTO definition themselves with regard to developed and developing countries. Okay. Developing country status ensures special and differential treatment. That's why these countries will be going for this. Next. RBI surplus transfer to government. Recently RBI had transferred around 88,000 crores. This is very high. Last year it is only 30,000 crores. I will show you the graph. In 17-18 it is 50,000 crores. 18-19 1,75,000 crores. Next 57,000 crores, 99,000 crores, 30,000 crores. Recently 87,000 crores.
Yes.
87,416 crores. Okay. And around 15 days back again they had transferred amount. Why this is needed? Why RBI need to transfer this surplus to Government of India? Because RBI won't be paying the income tax. Okay. RBI won't be paying the income tax for its income. So in that scenario it will be transferring the surplus. What surplus? There will be requirement for RBI to maintain some minimum amount in contingency fund and asset development fund. Okay. And other than that it will be having some other stable amount. Remaining all amount it will be transferring. Okay. This is called as RBI surplus transfer. And up to 2013 it used to not transfer. It used to keep that money in contingency fund and asset development fund. Post 2013, based on the recommendations of Malegaon Committee. Sorry?
Committee.
Yeah, that is also.
Latest one is
Bimal Charan Committee. And how RBI will be getting this income? Because it will be having forex reserves, increase in the forex prices, it can have increase in the money. Next, it will be handling the GSEC market, it will be getting interest, it will be giving loans to other countries and all. For the banks, it will be getting interest for them and all these things. It will be handling the government securities, state securities and all. It will be getting some fees for that.
Yes.
And printing of currency fees for that. Next, expected credit loss framework. What is this? You all know that banks must keep provisioning of loans. Means there is chance that some amount of loans might get lost because some loan takers might get default. So percentage of loans will be considered as provisioning. Now that value earlier used to be decided based on this incurred loss approach, means how much loss already incurred, based on that percentage used to be decided. Now RBI is planning to shift to expected credit loss framework, means now that provisioning ratio will be based on how much there is chance of loss in the future, based on that. Okay, this is a proactive step. Here just you need to know the word expected credit loss and incurred loss approach. This is related to provisioning in the banks. Next. Yeah, we entered the last thing. Liberalized remittances scheme. What is this? Remittances across the country around up to 2.5 lakhs. There is no requirement of showing proof or taking application or requirement of permission from any RBI or any SEBI and all. Okay, so up to remission up to 2.5 lakhs is allowed to remit money across the border without seeking any specific approvals. Okay, up to 2.5 lakhs. Now what are the changes happened in this liberalized remittances scheme? Earlier credit card transactions, see for example my friend, take my friend Akhil went to Canada. So he is making credit card transactions there, but that credit card transaction will not be covered under this 2.5 lakhs dollars earlier. Now rules were changed, the credit card transactions will also be counted under this 2.5 lakhs dollars. Okay, and the money under this liberalized remittance scheme cannot be used in the foreign countries for buying and selling of foreign exchange abroad, purchase of lottery tickets or sweepstakes, proscribed magazines and all. That money cannot be used for buying this. Okay, and there is no limit for number of times this 2.5 lakhs can be used. It can be used any number of times, and this was first introduced in India in 2004, and no restrictions on the frequency of transactions, as I told you earlier. And this facility is for individuals. This is not available to corporates, partnership firms, Hindu undivided families, trusts and all. Okay, as I told you earlier, now credit card transactions are also added. Earlier debit card transactions are already there. Okay, that's all. Yeah, by this we had completed the 5-star topics of economy. I hope already all of you are getting this. We are trying our level best to give you the quality content. Okay, and regarding this other important topics, since I am not able to complete all the topics in this limited time, I am giving the list of topics which are more, which you have to revise. Please learn GST comprehensively, because with respect to Mohit Minerals case and all other things, GST Council recommendations and all, GST is highly in use. Next, Finance Commission, 16th Finance Commission has been appointed under Arvind Panigrahiya. Next, Monetary Policy Committee, IBC Code, FDI and FPI, Green Hydrogen Mission, learn about withholding tax, Basel norms, capital adequacy ratio, USA federal rates and their linkage with Indian market, interest rates, inflation rate and all. Next, transfer pricing, angel tax, e-rupee or central bank digital currency, wholesale and retail. Next, cooperative banks, greedflation, shrinkflation, inflation targeting framework and monetary policy and all. Okay, these are the most important things. Please revise. Our only motto is to give some sort of confidence for you in this last leg of preparation, and if you want any sort of more help, you can approach us at our Vishnu IAS number. You can ask them to give my contact, they will be providing you. Okay, thank you.